Wonderful. Hey, everybody. Welcome, welcome, welcome. This is Indicator Warehouse's demo day, and we're going to do some demonstration of Raptor and also a demonstration on LettoChannels. Why don't I show you what we've got in store for you today? Again, my name is Ben Letto. I'm the CTO at Indicator Warehouse, and we do development of custom indicators, tools for helping you getting the most out of your trading. And today, I just want to make a note to you guys. Let's have you put together a list of questions or issues or comments that you might want to go over. And at the end of the hour, we'll definitely have a Q&A. We'll open up the mics and we can do some discussion. But just think about it now. Think about it ahead of time to get your questions and comments together. We'll be happy to go over those. All right. Secondly, because of Black Friday, yes, we are having a sale. I guess everybody is. But if you want 50% off savings and anything in our store, anything at Indicator Warehouse, today is your day. And you'll want to use the coupon code BENS Friday right there, BENSFRIDAY. Also, some of you might be here today because you are involved with Raptor. Raptor is our multi-approach indicator signal generator, and we just launched Raptor 3.1. It is available right now. If you do own it, it's available right now from your download portal in your membership site. If you haven't purchased it today, definitely consider doing so. It's a great system. Again, we are offering that coupon code, so you can purchase it at 50% off today. Lastly, at the end of our meeting today, before the Q&A, I want to do a special review of our latest tool. Well, we actually don't even offer it yet. This is like a pre-offering introduction called LettoChannels. So if you haven't heard of it yet, it's better than Bollinger Bands. It's predictive. You know, if you take all the good that's in Bollinger Bands, and Bollinger Bands is good, however, it is a lagging indicator. It doesn't show you what volatility is going to be. It shows you what the volatility is, or maybe just recent volatility. But LettoChannels solves that problem and gives you an advance notice of volatility and a little hint at direction. So it's really kind of an interesting indicator. And that's what I call Bollinger Bands on steroids. So if you use Bollinger Bands and you're wanting better performance, I think you're going to really like LettoChannels. All right, so let's get started. Now, how many here, I'd like to hear from you, do you all have Raptor already? Are you looking at purchasing it? Is it something on your horizon? Raptor 3. Now, some of you might own Raptor already, some of you might not, but if you do own it, you'll want to download the latest update. This is Raptor 3 right here. Very similar to what you've seen before. Nothing's changed as far as the signals, the color of the bars, the cloud, the two cloud formations that we use. What we did add, we added three things. First of all, we added a user interface, a UI pull down button right at the top. So this lets you control some of the new features. The most obvious one is at the bottom is to hide the P&L stats. Over here, you'll see text that's green, magenta, and kind of a blue color. Well, those are the P&L statistics, the results of our rapid backtesting. So I'm going to hide those right now. I can turn them off, and now it looks exactly like the old Raptor does, or I can show them. So we can get really fast results showing historical results, backtested results. Now, backtesting, you know, is not a guarantee of future performance. So I do want to make that clear. Make sure you understand that the risks of trading off of backtest. But backtesting does show some statistical significance, and that's the important thing. And you want to go in there with an edge. You want to go into your trading with a statistical edge. So backtesting is one way of doing that. So I've got the P&L stats on. I'm also showing here at the top something called the status. The status is the other feature called the trade assist. So we are going to have Raptor now assist you in entering the trades. it can actually place the trades for you, and you can see in the bottom in this white message says the trading is paused because we do have status set to paused. If I go and change that to active, you immediately see now we are active. So this will now trade. One contract will be traded on a number 3 signal. Raptor, as you might know, has 3 signals: a signal number 1, a signal number 2, and a signal number 3. And those are those little white boxes that print here. This is the number 2 signal you can see on the chart. Right now, it's only configured to trade on a number 3 signal. That's what that is. So it's active. You can also go to active always, so it will always stay on in an active condition. It'll always be ready to trade those signals. And then, of course, you have paused. And I'm just changing these values by hovering over this and rolling my mouse wheel. That's just a simple way to move through all of them. The next line here is you can change the direction of Raptor's trading. So you can say, I want to go both directions, long or short, as they come along. You could also go short only. You could also select long only. And a fourth possibility here is trend. So trend trading, the trend is up, and that means only long positions will be taken at this time. So trend is based on our 2 moving average lines here, which we call the clouds. And those are the, right now, up is the trend. So it notifies you that right now only long signals will be taken. All right. Let's take a look at, I'm going to turn, it's paused right now, so we're not actually going to trade, which is good. But I want to show you the statistics. Now we get into this next line, which is signal number 1, quantity is 0. Signal number 2, quantity is 0. That means I'm not going to do any back testing or trading on signals 1 or 2, but I am going to do some back testing on signal number 3, and I'm going to back test with trading of 1 contract per trade. Very, very simple, straightforward there. Okay, so let's take a look at back testing. I'm going to go ahead and I'm selecting now, I've selected signal 3 to be trading 1 quantity, 1 contract. But now we can select the ATM template that's being applied to the backtest. And right now, I've selected the one that I've created. It's called the 10-tick stop loss, 30-tick take profit, and that's the parameters of the trade. 10-tick stop, 30-tick profit. Okay, so I'm going to recalculate this. And what we see here in a second, the rapid backtester shows us that trading that alone, we're actually not doing so well if we trade between 9:30 and 15:30. Okay, the whole day, the trading is not so good. But if you just focus in on certain parts of the day, the number 3 signal has been doing very, very well. And right here, what we look at is the hour of the day for the entries. So trades that are entered at 9:30 to 10, those half hour, they had 8 losses. If you trade from 10 to 10:30, there's another 2 wins, 14 losses. So this has not been trading well during those hours. However, you do want to focus on the ranging period that is between 11 and 12:30 here. Done pretty well there. And at the end of the day, you don't want to be trading it as well. So this information gives you that edge in backtesting. You know that there's 3 sessions of a day. There's the open, then there is the midday or the lunch hour, right? And then there's a part of the day called the close. And some people consider then the off hours or the after hours is the 4th session, 4th division of time. So strategies, they have to accommodate for each of those sessions because volatility is very different in each of those ranges of time. And we can kind of see that in this breakdown right here. So based on a 10-tick stop and a 30-tick profit in the ES, we want to be trading this system between 11 and 12:30. Maybe even you might consider all the way to 13:30. So that is the middle of the day. And you can see that the 3 sessions are basically broken down here for us to look at. Now, another thing to consider is by day of the week. Now, if you've traded for a while, you might know that Mondays are a little different volatility-wise and a little different action than Tuesdays typically. Tuesdays are a little different than Wednesdays. Wednesdays are sure a little different than Thursdays, and Fridays are different as well. And this system, based on the 10-tick stop, 30-tick target, shows that if you just don't trade on Thursdays, if we didn't trade on Thursdays, we would have saved $1,000 of loss. Fridays, we would have saved $750. So these settings are not so well adapted to Thursdays and Fridays. They do great on Tuesdays and Wednesdays, and Mondays can be excluded too. So it shows the win-loss percent here. It shows the number of wins, number of losses. So if we were just to trade Tuesdays and Wednesdays, and I'll show you how to do that. Let's go ahead and edit the indicators. And we're going to go over to Raptor settings. And we're just going to select Tuesdays and Wednesdays. So I'm going to go here. And the way we do that is by going to and when. TU for Tuesday, W for Wednesday. Let's go ahead and hit OK. And there we go. Now you can see this back test only involves Tuesdays and Wednesdays. And if we do that, our P&L shoots up. We're a total of $1,500 in profit on 29 trades. So the average trade is $52 a trade. So that covers your commission and slippage. Profit factor is 1.7. Very nice. Very good job. We do have some losses still in the morning. Now we can sharpen up our P&L by getting rid of the morning trades, and that will increase our numbers. And let me show you how to do that real quickly. Let's go ahead and only trade from 11 till the end of the day, right? And we'll see how that affects our P&L. Okay, the way we do that is pretty simple. Let's go down here to the start time for the backtester. You can see the backtester here. We're going to go from 11 o'clock to 15:50, only trading Tuesdays and Wednesdays, and hit OK. All right, looks good, looks really solid. So even better, yeah. So we're total gain for that backtesting parameters are $3,000 on 12 trades. So that's an average of $250 a day, not too shabby. And that's just by excluding the morning hours and only trading 2 days a week. Now, again, I do want to remind you, backtesting is not a guarantee of future results, and that is important to know. Again, we are just looking for some sort of statistical understanding of the picture, and backtesting can help us to do that. All right, I've talked a lot already, and we're only a few minutes in. I'm going to need some help from you guys. Now, Raptor is a trend trading system in general. It really depends on your parameters. You know, if you have scalping ATM strategy template, like a 4-tick target and an 8-tick stop, you've turned it into a scalping system, right? If you have a 10-tick stop and a 300-tick target, as a matter of fact, one of my templates right here is 30-tick stop, 130-tick target. That's a big, long trade, very big and very long. So that could be a swing or even a, position. There are a lot of ways to backtest this. I'm just backtesting it again with the setting, a 10-tick stop and a 30-tick target. And that's what we're looking at here with our P&L. Tell you what, now that I've gotten rid of the morning hours, I'm just going to see how this works for all the days of the week. Now, we're only doing this on Tuesdays and Wednesdays. I'm going to turn on all the days, and let's see how that looks if we wanted to spend the entire, all 4 days, 5 days. Yeah, I mean, Thursdays and Fridays are still not so profitable, right? You do average about $208 a day. There are 12 tradable days in the look back. There's about, right here, it says about 2.4 trades a day. So just to give you an idea of the busyness of the system. Before I move on, I guess that's pretty much all I wanted to show you in Raptor. Before I move on to LettoChannels, which I'm super excited about, by the way. LettoChannels has been I think you're going to find it's a brilliant approach than Bollinger Bands was. So because it uses a whole different level of statistics. All right, now Raptor can be used, like I said, on short-term, medium-term, long-term trades. It can also be used on any market you want, right? A market is a market. We're looking for trend trades. Any market out there is going to be available to be analyzed. And again, with the rapid backtester, that's going to be really, really easy to take a look at and analyze. Oh, one thing I didn't mention, guys, is right down here in the Monte Carlo section. Now, many trading tools show Monte Carlo analysis results. So we wanted to put those into Raptor, and they are here for you. So we just wrapped up a short demonstration of Raptor, some of the new features in Raptor 3.1. Start your trading off right with the right tools. We have been in business since 2009. Raptor has been a system that's been used. I think we developed Raptor in 2011. So we're going on, gosh, 13 years of Raptor usage. A lot of happy customers, and there's a lot of dimensions to that software. So I want you to take advantage of that while we've got a good deal out there for you. All right. So I'm not seeing any questions. So let's move on. Let's take a look at LettoChannels, guys. Let's take a look at LettoChannels. Have you used Bollinger Bands before, right? Everyone has probably seen those. Now, Bollinger Bands are based on a center line moving average. So is LettoChannels. So this yellow line is a long-term moving average. We find long-term moving averages are good. This is a 100-period moving average, the yellow line. Now, like Bollinger Bands, LettoChannels has an upper band, which is this red and blue area up here. It also has a lower band, which is the green, the red, and then this blue, right? So that is our channel. Now, isn't it odd that it jumps around so much? You see how it expands out to here, and it contracts down to here, and it's smaller here. That is because, now catch this, guys, because this distance from the middle line is based on history. It's based on what does this market do during this time of the day in history. So from right here, from 8:30 until 9:30, this green area here, what it does, it's telling us that 10% of the time, the market moves between this time and this time below this green level, 10% of the time only. So 90% of the time, it's not that far down. It's up here somewhere or above the midline. So 10% of the time, it exceeds this green level. That's history, right? We know that from history. Now, the blue line is the maximum move it ever has done during that time period. So in the look back history, I think, what have I got here on this chart? I have got 50 days of data. So in the last 50 days, price has at least one time moved to this blue level from the midline. That's a pretty big spread. But isn't that helpful to know that when it's down here, very rare territory, and usually it reverts back to the midline. So the blue line is the max move it ever has done in the last 50 days. The green line is the top 10% exceed that. 10% of the moves are further out than that. Now you'll see also that it's bigger below the yellow line than the red line is above here. Now the red is the opposite. It's how far is it usually above the moving average? Again, these red dots are the top 10%. 10% of the time it exceeds that red level. And then up here, this blue line shows the maximum move it has achieved in history away from the moving average during that time. So, do you think that's helpful? How many of you think knowing historically on the chart right in front of your eyes on a play-by-play basis, when has the market hit its extreme levels from the 100 period? That is really what we're talking about, and that's really what LettoChannels gives you. So when price moves above that red zone and even comes close to that blue line, we expect a reversal. We start looking for shorts. And really, you're going to look for shorts to come back to the yellow line. So this is a big move. This is a big move past the yellow line. But, on typical targets, you want to take a look at hitting the yellow line. So there was a lot of our sell signals were here, and I took advantage of this trade actually. I got into the trade in certain periods here, and it waffled. It went up and down. So I got out with a small loss, and then right here on this trade, I went short right there at that point. You can see on this overbought condition, and I exited right near the bottom of that, right near the moving average line. Very nice trade. I really nailed it. I crushed that trade. But I want to also go over the other, I guess, elephant in the room is what is this histogram? Do you guys see this histogram here? It's kind of a deep red color. Back here, it's a green color, and here it's a red. Well, what this is saying is this is an average location line. If for every one of the 50 days, I added up how far the closing price is from the moving average, from the 100-period line. This is the average distance. So right here, we're looking at an average distance over the last 50 days of about 59 ticks. Do you see that? We've got 59 ticks. So is that helpful? Is it helpful for you to know that during this time, on average, price is about 50 to 60 ticks below the 100-period moving average? Well, it actually is. It actually is, because I saw the overbought condition here. We're up high. And I saw for the next, I don't know how long this is. If you start seeing the red area is long. It goes all the way to the green starts here. Right about here is where we start seeing green for a very small amount of time. So for the next 130 minutes, we are predicted, or the market likes to be or prefers to be under the moving average. All right, so does that make sense to everybody? All right, so does that make sense? Does that make sense? Answer some ideas about what this is. So this is the gold market. Again, we did really well on this trade. Why don't I pull that up here a minute? Where are we at? Okay, I have some screenshots for you of this gold trade. Let's bring that up. Okay, so this is the gold market, and we were just touching that level. Oh wait, this is a couple days ago. Let me close that one. That was another gold trade that did really well. Here's the one from the 3rd, December 3rd. This is silver. I don't want silver. That was another great trade. We can show you that. This is silver. Silver did well on that day too. But here is the gold trade. So the gold market moved up, and LettoChannels, you see this histogram, which I told you about a 59 tick histogram to the downside. I went short right here, got in. I was already up 200 bucks by this mark, and I did get out a little bit later. I think I ended up with about a $450 gain on this trade. Silver, gold. Let's take a look at gold again. Let's go ahead and do that. Gold plummeted further, all the way down to reaching the oversold level. Now look at this. You see this? There's another rectangle. Now the rectangles are automatically drawn. They're drawn whenever price exceeds the red line or the green line, the green dots. And right there, look at that beautiful touch of the 10 percentile line. This was at 10:21 in the morning. Had I held on to it, now I only held on to it until here. So I made $410 on that trade. You see that? Had we held on to it, the gold market went all the way down to there, which is a move of $1,780. perfect move on the display of the LettoChannels. Prediction came through. The market moved down just like it has in the past 50 days, and we were at an oversold level. Let's take a look at that day. Now this is yesterday, 12/2, and we went 12/3. I think this is 12/3 at 8 o'clock. Okay, this is where I went short here. I lost a little bit. I went short here. I gained a good amount. Got exited there. I went short here, exited quickly. Went short here. I saw some support coming in, so I got out relatively quickly, gained a little bit there. But then right here on my overbought signal, which is this red line, went short, and we exited right here. So this is that $410 trade right there, 370. It was roughly that. So I got out there. But look at that move afterwards. Some news came in at about 10 o'clock, so we had a lot of movement. But had we gotten back in, now this is the one I showed you where it just touched the oversold area. And this would have been a great time to trade. I was away from the market at that time, but this would have been a great time to trade, right? So we went, had we gone long there, that would be a great time to enter. Now this green line shows a possible trade going long at the buy signal. The green and red stripes, that's a different indicator, and it's called the ATR trailing stop indicator, which I'd love to answer questions on that if you do have any questions. All right, so let's take a look at, you know what, heating oil has done really well lately. But we don't want to go into that. You guys probably don't trade heating oil. Is there any market, maybe that's a good question, any market you guys want me to look at and see how LettoChannels did? Now here's one today. This was strongly oversold here. And this is on silver. This was today, I believe. Yeah, the 4th. I was not here at 8 in the morning, but would have been a great time to go long. Now, the reason why I would have gone long here is because the prediction for LettoChannels shows the green histogram. So what this is telling us, again, is the market likes to be, it usually prefers to be above the moving average during this time period. So if I'm oversold, I want to start looking for buys because historically it likes to get above the moving average, and look what that's exactly what it did. Now here's a situation that it was way above the moving average right at this point. Let's draw a vertical line here. Do extended line, but right here you can see the histogram went from green to red. So from this point forward, we're expecting to be below the moving average. It just didn't, okay? It failed. We were way above the LettoChannels historical volatility bands there. You might have been able to do some, you know, support and resistance trading here in silver. It just failed. You know, I'm going to just say it didn't quite work out as we expected. We did move up here pretty sharply. I like to look at our cycle dots, are these magenta dots that show, it's kind of a very simple CCI indicator that's printing those dots. But it had a really good day today. Here's another one that came across at 12:50 today, just a short while ago. And another sell signal produced. Let's refresh that so it cleans it up a little. But you can see we bounced between the prediction channels here and here. Now, this is LettoChannels going forward. You see that? So we're projecting into the future what the average location is, value to it. It's got a lot of value, $25 a tick. If we were to go long right here, we're targeting $325 just to the midline. You can see my ruler shows 325. All right. If there are no questions, we can wrap it up, but I want to make it available to you. I really am watching these the LettoChannels. It's the most unique indicator I've seen. And you can see why. It gives some great predictive entries here. Look at this one. This was at about midnight, 12:30 Eastern time in the morning. And I probably would not have taken these shorts. Again, this is a short signal. We're overbought. I wouldn't have taken it because the future prediction was up for a good part of this period. I don't want to be buying when the prediction is already to be up. I would have really been interested right here. You see this one? We're oversold. We're below the green levels, the green and blue lines. Oversold, and the prediction is up. That's what you want. You want pressure to be contrary to the historical norm, and that is exactly what we find right here. Look at that. Had you jumped on that trend or that reversal, you're looking at 325 just in that move. Trading isn't about trading, putting in the market constantly. Trading is about finding the best time to trade, and that's what LettoChannels helps you find. Here's one that I would have considered strongly because we're oversold, but we're coming into a time starting right at this point where we should be historically be above the moving average, right? Now, you know, there are multiple times possible entries here. I would have probably been interested once we found a bottom and we moved to a new high. I would have gone long in this area. Maybe a stop out. Maybe if I got out nimbly, I would have, you know, gained $50 to $100 on that trade. All of these are possible buy entries here because we are looking at a big move up above the moving average. This would have been a great entry here in silver. Again, you would have had a $500 move in that case. I don't have the MNQ up. Let's see what I do. Okay, I brought the 6E. Does anyone here trade the 6E or any market you want me to look at? We can bring it up for you. Let's get the MES while there's nobody talking. I don't think there's been a lot of volatility recently. I think the holiday kind of took the wind out of the MES. Not too many signals. So this was at about 9 in the morning on, what day is this? The 3rd. Let's go back to the 3rd. 9:08-ish, 9:16. Those are those two rectangles that we saw here. This is where you want to be looking at buying. Again, the MES is typically above the moving average during that time period. Well, I've gone over a couple markets. Before I go, does anyone have any questions here before we close up for today? All right. Well, hey guys, it's really been a pleasure to be with you today and share this info with you. Again, we went over Raptor, we went over LettoChannels. We've got more tools to discuss and to show. We'll do that on our next meeting on Friday. I'd love to have you join us again. All right, guys. Hey, I really enjoyed it. Thankful to have you here. Thankful to be part of working with you. Again, email me anytime. My email is support@IndicatorWarehouse.com. Feel free to reach out. Anything you need from us, we're happy to help. Until Friday, I hope you can join us when we meet again. All right. God bless you all. And we will talk to you later. Bye-bye now.